For more on what NVIDIA earnings mean to the broader market, let's bring in Julian Emmanuel, Senior Managing Director at Evercore ISI. He has a 6,000 price target on the S&P 500, which implies a 7% gain from today's close. It's one of the highest on the street. Julian, welcome. Good to have you with us. Why are you so happy?
Look, the way expensive markets end, and this is an expensive market, and we all know it is, and it's been that way for the majority of the year, is one of two things. Number one, you see an extraordinary amount of speculative froth. We've seen it before. We saw meme stocks go back to 2000, the tech bubble, et cetera. Lots of activity, lots of, very bullish sentiment. We're not seeing We're not seeing that at all, okay? And on the other hand, the other thing that ends it is if we see concrete signs of recession. And yes, the economy is slowing, but the concrete signs of recession aren't there. We were just told on Friday that the soft landing looks pretty darn good, and that, in fact, if the labor market weakens, we're going to be,
The third thing that's not good is rising interest rates, and we've got the opposite of that in all likelihood.
Exactly. The Fed has been prepared. It is prepared, and they are sort of the engineers. We've gone from the pandemic inflation adjustment directive to being the engineers of the soft landing.
All right, maybe it's not concrete, but it's close. Some rule definitely triggered last jobs report, without question. I think of people coming around that now. And the re-steepening of the yield curve historically suggests we're at the beginning of a slowdown, not towards the end.
Agree with all of those. And I think we'd also all agree that some of the things that we've seen that traditionally we can point to, and I don't think it's any coincidence that Sam herself has been trying to talk people out of the efficacy of the rules she created. The inversion of the yield curve going on a year and a half now. Normally, the recession would have started months ago. It's not to say that it's not going to happen. In fact, we think it could be a 2025 thing. But again, when you're thinking about how the market is right now and where stocks are going, the ingredients for either the blow off or the turn down because of weakness, they're just not there yet.
Do you think that was there anything in Friday, whether it was really kind of getting to, hey, we're going to support the labor market now, was there anything that changed your view on Friday to become more bullish? And we were talking recently about the weaker dollar. Layer that into your bullish outlook, because that can be certainly very bullish for certain sectors.
So the weaker dollar, as you know, long historical tendency of being good for markets and good for risk assets. That's obviously been the case in recent weeks. But I would also say this is just sort of a word of caution, particularly since it's September. We don't want to come back from the beach. We don't want to go back to school. Stocks go down in September quite often, is that the dollar has been going down in a straight line. At the same time, the S&P 500 has been going up in a straight line since August. Look, long term, those are very good messages. Maybe you want to be just a little bit cognizant of risk in the very short term, though.
Court?
And I'm curious what your position is in small caps, which I think you are constructive there. And I'm curious if you can talk to that, because I think people are pretty divided of if that can last. And also, we were talking about China earlier, and those small caps have less exposure to China, the Chinese consumer. Wondering if that plays into your decision there at all.
It's a domestic-focused story and always has been. And if you look back to Friday, the message from Jay Powell was soft landing, and small caps love a soft landing. And frankly, what we saw in July, the incredible, very historic outperformance of small caps over the S&P 500, over the NASDAQ, our quant work says 12 months forward, small caps always outperform when you see that kind of explosion.
You haven't mentioned it, and I'm struck by how seldom it seems to be mentioned in commentary, and that is the election. Does it matter?
Oh, yeah. It definitely matters. There's no question about it. And in fact, when you look at it in years where the balance of power in Congress in particular is this tight, you get volatility. So frankly, when you think about it, the first 6 months of this year where there was very low volatility, welcome to the second half of the year. What we've seen in July and August, we're likely to see the rest of the year, both to the upside and the downside. It definitely matters.